Well, with the choppy nature of the grain markets today, it's interesting to see that right now the gaps between the highs and the lows of the day are just kind of slimming down, and we're getting quieter and quieter as we go, as we get toward the end of the session. So let's take a look at what's going on here in the corn board first. And these quotes are provided by bar chart. Remember how we had the corn about 5 or 6 cents lower earlier? Well, now it's down 2. We're trading at $6.83 per bushel, still about 4 cents off of our earlier low. Now, soybeans. These quotes from bar chart show November up a penny at $13.82 3/4. For a while, we had double-digit gains. That disappeared. They went lower on the day. Now they're off of the lows by about 4 or 4.5 cents. Well, let's see what wheat is doing. Well, the Chicago wheat market is getting kind of quiet too. After hitting a high of $8.58 last night, and then this morning we hit a low of $8.33.5. Now we're at $8.38.5. That would be down 2 cents. So it has come back a fair amount. Kansas City wheat, we have December down 9 1/4 at $9.31.5. That's still about 24 cents off of that overnight high. It just seems like it's stuck there, right where it is. December spring wheat, well, we're down 3/4 cent at $9.51 1/4. The cotton market really fell on hard times this morning, and it's still showing triple-digit losses. Look at this. December down 2.45 at 75.37 per pound. I am pleased to welcome aboard Mr. Chris Swift of Swift Trading. He's based in Nashville. Chris, these markets, as I mentioned, they have been very choppy, but they're getting kind of quiet as we get close to the end of the session. Now, what is it that you see driving the market? Is this just all technical choppiness or what?
I think it's a combination of things, Marlin. And the one thing that we noticed, this is day 8 of the corn trading within literally the exact same trading range it has. And we're waiting for new information. We saw that on Monday we had pretty much most of the crop harvested. There's not much delays anticipated for the remainder of the harvest. And we believe that there may be a little bit better corn in there, but yet we still don't see the market reacting to that as far as some farmers selling or harvest pressure or anything like that. So we have to go back and we look at energy. Energy really has perked up over the last couple of days. And I think that's at least what's keeping the market from going down, even though it may not be pushing it higher.
Yeah, right. December West Texas crude right now, 89.38. That would be up $1.45 per barrel. If it breaches $90, would that help the corn or the soy oil very much?
It's all going to help, but note that it's really the products that are moving significantly more than the crude oil. Diesel fuel up sharply, gasoline up sharply. It's those products out there that are really moving higher and probably going to spur something. If there is going to be something spurred, I think that's what would do it.
Well, diesel fuel, let's look at ultra low sulfur diesel on the screen here. November, man, you're right, 12.9 cents higher at 424.9 right now. That would be the price per gallon on the futures board. Let's see what the unleaded gasoline is doing. They call it RBOB, and we have November futures. That would be up 10.2 cents per gallon at $3.01 as it stands right now. It had been as low as 288.5. So yeah, you're right, a lot of pressure there. Of course, a lot of folks wondering what's going on with natural gas. In some areas, there still has to be some grain drying, and well, natural gas getting even cheaper today, if that's a relative term, cheaper. But November is down 22 cents. We're at 538.5 per million BTUs. So anyway, just keep that in mind. That gas market has been softening up a little bit. We'll come back and we'll talk more with Chris Swift. We'll take a look at our livestock trade. What's going on there? He's the expert. We'll pick his brain right after this. Well, we're talking with Chris Swift, and let's change our focus now and talk a little bit about our livestock trade today. You know, it's been a very quiet week, Chris, when it comes to the cash cattle market activity. Not a lot to talk about. And we got up until today and really still nothing to really report on. Now, I just checked the wire. It looks like maybe we have some cash sales today. We'll go in the Southern Plains at $150 per hundredweight today, and we're bidding $152 in Nebraska, I understand. Looks like dress basis sales, $238 to $240. What do you think of that?
You know, it's pretty good, but they're holding their own. If you look at the inflationary pressures that the consumer is under, The beef market has held up exceptionally well when you consider that. Myself and some others had thought that would be impacting towards the consumer, the high retail meat prices, but seemingly everything is just kind of clicking right along, and that might be something to do with the increased packing capacity that we've seen over the last year. So we know that production is pretty low right now, but processing ability is pretty high in that beef and cattle market there. So if we look at what that brings, it's probably just steady prices.
So on the latest commitment of traders report that came out last Friday, it looks like the large managed money funds on the cattle side, they were holding long positions. I'm showing of over 37,000 contracts. And on the lean hog side, they were actually net long 35,700 contracts. Is that in jeopardy now if these markets turn?
Well, you know what's really interesting about that is the price difference. So when we look at those longs coming into the cattle market, they're buying the premium of the futures market on there, and they're buying them at contract highs. When you look at the hog market, they're buying discounts in there, even though still very close to contract highs, but they're buying the discount. So I'm always a little perplexed why somebody would come in there and want to be paying so much for the premiums, especially speculators hoping that the cash will come up to those levels.
Well, and you mentioned the lean hogs. In fact, let's take a look at them first here, if we could, on our quotes from bar chart. They are showing much more weakness on the nearby contracts. December lean hogs down $3 and a nickel. We're at 85.45. Whereas on the far out deferreds, you're only maybe $1.40 lower, for example, in May. But the nearby contracts are already at a big discount to those deferreds. So they're adding to that spread. They're widening that spread out here today between the nearbys and the deferreds by, gosh, over $1.50 right now. Now let's take a look at live cattle. Live cattle, December, down 7 cents at 153.50 right now. So we're still about 35 cents away from our high of the day, kind of stuck in the middle of the trading range. And on feeder cattle, well, you have November down 75. We're at 178.07. It's kind of quietly lower. We're down about exactly $1 off of our earlier high. So that's the latest on our livestock trade. Chris, I thank you for joining us. You have a good trading day out there. Chris Swift of Swift Trading with us. Suzanne, that's the latest. There you go.